Good morning, traders. It is Monday, the 27th of June, 2016. It's 8:01 a.m. Chicago time. Hopefully, the feed comes out clean to you. There have been some issues with my broadband again. Anyway, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. It actually looks like my connection isn't going too well. Um, let's just push through. The key news is still the European um, referendum on the British exit. The key elements as of right now. Let me know if the feed is really bad. It looks to me like it's pretty bad, but I'm not sure. Um, the key elements right now: the British pound has pushed even lower, has dropped even lower against the U.S. dollar. The cable is beyond 30-year lows at the moment. Um, in addition to that, the European banks, if you across the board, are getting hit. RBS and Barclays down more than 10%, having had um, a halt in their stock trading. So pretty bad across the board for financial institutions. So I'll post the video in a minute. We'll get through this and I'll post the video. I cannot deal with the connection issues right now. Also, the other thing that we don't like here as a market. Remember, the market abhors uncertainty, just as nature abhors a vacuum. And the current political situation with the Labour Party in England. The upheaval is that 12 members of the shadow cabinet resigned over the weekend. The party leader Jeremy Corbyn uh, said he would not step down and has actually fired one of his foreign secretary Hilary Benn for potentially staging a coup. So with that happening and with the market not knowing what's up, um, it really has affected how the market looks at things. As long as there is uncertainty, money is likely to move into safety, and that's why the U.S. Treasury bond is trading in the 172 handle. 172 handle up 1.67%. That's really high. The U.S. dollar up another 1%. Gold is up to $130, $1,330 and 80 cents. The 10-year Treasury is also up, and the Bund is up, with the Euro stocks, the DAX, and crude oil leading the push down. So money is moving from high risk, high reward assets to safety. John Kerry's heading to Europe to start to try to mend some of these issues. Not sure what he can do, and also the Chinese government has promised to allow the yuan to float with the market. The yuan is said to be included in the currency basket later this year. Uh, the People's Bank of China weakened the currency's reference rate per dollar by 0.9% to 6.63. So there's some action on that end there with the People's Bank of China. So there's a lot going on. That's the bottom line. Expecting continued turmoil and uncertainty and volatility in the market, which I personally like. The VIX being at 25 gives us some opportunity to get some movement in the market. So this is how things are working out right now. I want to spend a moment here and take a look at. There's nothing to review on Friday. Friday I did not do a trader bite. I traded through Thursday night and actually Friday night until about 4 a.m. Central, and then came back on. And it's just I just needed to focus on what I'm here to do, which is to look at trading. So overall, One of the things I wanted to look at here, other than the weekly uh, overview, we do have some numbers today. Advanced goods came out. We do have services PMI 15 minutes after the open. This is a prelim number, expecting 51.8, and Dallas Fed at 9:30 Central, 10:30 Eastern, and ECB's Draghi is to speak at 12:30. 12:30 Central, 1:30 Eastern, and that's expected to be a market mover as well. Tomorrow, Tuesday, we have GDP, we have personal consumption, the S&P Case-Shiller Housing Index, Richmond Fed, consumer confidence. There's a lot going on tomorrow in the pre-market at 7:30 Central, 8:30 Eastern, and also at 8 a.m. and 9 a.m. Central, or 9 a.m. Eastern. Let's stick with Eastern, 9 a.m. Eastern, 10 a.m. Eastern as well. So again, tomorrow we're looking for GDP, core PCE, personal consumption, S&P Case-Shiller, Richmond Fed, and consumer confidence. No speakers tomorrow that we know of, although I'm expecting a parade of politicians and central bankers to continue to try to temper the market's expectations. Remember, the market continues, and I'll talk about this in a minute. Um, the market continues to seek out those buyers. This is why the market drops. It is auctioning lower in an effort to find a base of value where buyers will step in. And traditionally, and we'll look at the charts here in a minute, traditionally buyers do step in, and they step in hard after these drops. They have since 2008. So it's a matter of time before the market finds its foundation and starts to base and then starts to move back up. So just don't get too bearish here. I know everybody out there screaming bloody murder and the world's coming to an end, but we've been through this so much. I've been through this for 16 years of trading. I've been through this so many times every year. It is the same. The market has a tendency to want to go higher, and it has a lot of force behind making that happen. On Wednesday, Eurozone consumer confidence for June, personal income in the U.S., PCE deflator, personal spending, PCE core, and pending home sales, as well as gasoline inventories. The Fed Reserve Board releases the results for its stress tests on Wednesday. And then on Thursday, we get the GfK consumer confidence. Actually, it's Wednesday night our time, Thursday at midnight, 5 past midnight in the UK. We get German unemployment. We get UK GDP. We also get UK current account, Euro CPI, US Chicago PMI, all on Thursday. And of course, we get our own numbers, the job market numbers, and initial claims, and so on. We get Fed Speaker Bullard on Thursday. On Friday, we have China's manufacturing and non-manufacturing PMI. These have been movers in the past for those who are trading the Asian session. The UK PMI manufacturing, and then on Friday we also get construction spending, ISM manufacturing, and ISM prices paid. Busy week on the calendar, so keep an eye out on your news feed. It's really important to have a good news source. If you're looking for a news source, a news squawk, ping me. I've worked out a deal on a 50% reduction on Trade the News if you want that. But other than that, let's switch gears here to look at what is ahead here. I'm just going to point out, so this is Friday's action right here, and the chart looks really messy because we're still trading in a large balance zone with a lot of levels in there. But this is Friday's action. We opened down at 2031.50 and we rotated up to 2064.75. We are in the composite. We traded across the composite point of control. We traded across the composite point of control, and then sellers stepped in at 64.75 and took it all the way down to 2016.50. And right now, the market's trading below the market. Right now, the S&P is trading at 2008 with some key levels. I want you to pay attention here to the 1986 level. This was the former 1995 in the March contract. There's a double top on a daily here, double bottom on a daily. There's a monthly LVN. There's just a lot going on at this level here. There's a composite. Um, Low volume node. This is a key area to test here, and is the neckline for the composite point of control. This is the first neckline. This is a key area. Again, 1986, key area to watch below key test area. Looking at the bigger picture, I'm going to bring you into where's my research chart? So I'm going to bring you into, let's see, there's a chart here called research, which I pulled up. There it is. I'm going to bring you into the yearly chart. So this goes back to 2001. Well, this shows 2005, 2006, 2007. The market peaks out. 2008, we have the drop. 2009, we have the beginning of the recovery, and then we've been one time framing meaning, oh, this white is not going to work. Let's try yellow. One time framing means higher lows, higher lows, higher lows. So we've been doing that on an annual basis now since 2009. Higher lows until the end of 2015, and then we have lower lows earlier this year. We went down to 17 something, 1794, 1786 or something like that. And what we've got going on here on the yearly is a megaphone type of formation. Potentially a megaphone is also called a broadening top, and coming into a broadening top, the pattern, those who follow patterns, pattern traders look for a broadening top to be a bearish break. But if you look at the low of 2016 so far, it is pushing up against the high of 2013. And overall, we have engulfed in the first 3 months of the year. We have engulfed 2015's numbers, the first 3 months, because that's when we've put in that low back in February. So you can see that the strongest volume is down here. The strongest volume down here is in the 1200 area. This goes all the way back to the flash crash, which is adjusted. The adjusted price for the flash crash right now is 478. But you can see there's a ton of volume below, and the top seems incomplete to me. There's a lot of volume going on up top, so it'll probably make a new high and push that. But overall, it's not really auctioning in a progressive way. We did stop one time framing up on an annual basis. When we look at the monthly, this is the weekly, and the monthly is right here. When we look at the monthly, here's June so far. June is going to open today at 2008, so it's going to open below May. Again, the monthly's engulfing. June's engulfing May. May was below April. So overall, it's really looking like the market is making, the point to take out of it is that the market is making a strong effort to make newer highs, and it's having a difficult time making new highs, even though it continues to do so. There's just a lot going on for the market to be concerned about. So when you look at the bigger picture, yes, this supports the the screaming bears. I call them the screaming bears because every time the market downticks, you get all these people coming out bearish and putting their account behind one trade on the short side like they are right now. But overall, the market drops so that it can find buyers, and it's going to continue. It's likely to continue to drop before it finds those buyers. Okay, so don't get carried away on the short side. Looking at the 15-minute on the overnight session was very quiet into the Asian session, and then it attempted to push higher. It's attempted to push higher, close the gap from Friday and has sold off again. And what we have is a week low now on the overnight session. So I'm expecting continuation of the selling. I don't believe, I'm not seeing evidence that the market has found its buyers below. Okay, so a quick look at the cable. This is the cable. This is an important chart to watch. I've had an eye on the cable chart and on the cable dome to see what is happening in the British pound and how it's affecting our trading in the indices. And there is a correlation here. You can see the cable found found a balance point yet on Friday, found a balance point in the $1.37 area, but has given that up, has dropped lower, and it has a double distribution now in the current session. It has traded up here and has fallen and has found balance again. If a cable does not get back above the 134 even area, it's likely to seek lower prices and continue to make 30 plus year lows. So that's how that's shaping up, but it's an important product to watch. We are correlated with it momentarily. It's where the money is coming in and out right now to reflect what is happening in Britain. So what are we expecting today? Today we're looking for an open. We're looking for an open out of range. The expectation is that intermediate term traders are likely to be in control, which means that we're likely to have some pretty strong swings coming into today. And and the expectation is that we're likely to be responsive back into the 2016 area. And then I'm looking for very wide waves with a downward skew. So I'm looking for a push lower, but be careful. The higher time frame is active, and we're likely to see big swings up and down. This is a good day to get chopped up to pieces. This is hypo 1, hypo 2. If we are able to, I'd like, the potential is, remember, we're looking for buyers. It is likely to push lower, base, attempt even lower, and then start to rotate back up. That'll be hypo 2. The scenarios that could take place given the imbalance in the market and given the fear in the market and the fact that it's news driven, there could be 10 different scenarios that could play out. But that's given my experience and the way the market traditionally trades, this is what I'm expecting. Okay, so that takes care of that. Again, sorry about the video. It's just difficult to fix this problem for whatever reason. And the final thing I want to tell you is that Thursday we have an open AMA. We haven't had one this month. There will be an open AMA on Thursday. Look for the link on Twitter, and if you're not part of the email list on my website, I invite you to join that. The link for that is in the description in the video. Good luck today. Catch you later. Bye.